Hello everyone, welcome to our morning briefing. So dollar slipped lower overnight and so far today as well. So we have seen dollar being the weakest currency of the day and safe havens benefiting, and all this has to do with the caution sentiment which is back in markets. So we've seen treasury yields rallying into the comments on the comments of President Trump, who actually criticized Fed and the rates by saying that the rates are too high, but also he said that he's holding up talks with China. But as we are seeing, the expectations for a meeting between China and US are quite low. So especially after a diplomat from China stated that the atmosphere between China and US is poisonous, and there is not enough preparatory work done in order for a meeting to take place. So expectations for a meeting are very, very low. So this actually implies to no progress on the trade front, and this is something that actually added pressure to dollar and benefited safe havens. This uncertainty around the trade talks and the lack of progress on the trade talks. Other than that, something else that actually drove dollar lower was the fact that Bank of Canada seems to have been looking to support the yuan through selling denominated bonds. This is something else that actually added pressure to dollar. And of course, again, another comment from President Trump saying that euro and other currencies are devalued against dollar. This is his belief actually. This is not something that it's a reality right now. So all these remarks from President Trump and the uncertainty is something that added pressure to the dollar and benefited safe havens, as I already mentioned. So that's why you see dollar again spiking lower. Yen is benefiting on this, so currently at 108.30, so it's at the support area right now. It's retesting the support area because 108.30 was also the low of the week, so it was our support. The next real support is coming at 108.20 or even lower at the high 107 area, which was 2 weeks support, as you can see over here, this area over here. So if that 4-hour candle closed like that, strong bearish candle, then the next area to be watched is at 2 weeks support. As I mentioned, safe havens benefited, so that's why we see gold rallying, breaking 1336, currently retesting 1337 area. So the next resistance for gold is up to this gap over here, is to fill this gap, which was created back in June 7th. So the next support, the next resistance, 1338.90 or even higher at around 1340 area. Support holds at 1335, which was the low area of the last hourly candle, which closed earlier, just now actually 7 minutes ago. Last but not least, euro and dollar. So euro dollar we have is triggered by the fundamentals, because don't forget that next week we have FOMC meeting. FOMC is expected to proceed to a rate cut and is expected to shift the guidance towards a dovish positioning in the monetary policy. So from one hand we have dollar, which at the back is FOMC and the expectation for a dovish position of FOMC monetary policy meeting. On the other hand, we have euro, which again is expected to shift. Not expected, it's already shifted to a dovish, to more dovish stance, and this is something that Draghi will confirm once again, is expected to confirm once again in the meeting in Frankfurt, which is taking place right now, if I'm not wrong, in a few minutes. Let me check, let me double check. yes, in 7 minutes time we have President Draghi speaking. He's expecting to again confirm a dovish stance for the monetary policy, the ECB monetary policy. So dovishness around the central banks right now. Euro dollar up to 113.40. Next resistance is at just 8 pips higher yesterday at Friday's high. If that breaks, then the next real resistance is up here and the end of in the mid of March area. So this is quite crucial. This is quite a key point. The 113.48 is a key point because it was held for more than 2 months time. Okay, this is the daily chart. So on the break of this area and this later daily up fractal, the next resistance is coming back on the mid of March. So back on 1370, which is the 200 moving average, or even higher at around 114 area. Last but not least, cable is spiking higher, and this has to do with the Brexit front once again. We had John Boris saying that we won't have any delay on Brexit. But it seems that for some reason pound is benefiting into the European session, spiking 127.50. So the next resistance is, let me over here, it's at 127.53 to 112.27.60. 112.60 is Friday's high, so it's the next resistance for our cable. Support holds at 127.12. So 1, 2, 3, 4 sessions low in the 4-hour candle. So that's it from us. Thank you for watching. European calendar is quite empty today. The only thing that we have is Draghi speaking in a few minutes, in 4 minutes. So your attention should be triggered on trade front, on Brexit front, but also on the inflation data out of US later today. Thank you for watching. Have a great trading day and see you later on. Bye bye.